Those are all the top headlines that we are tracking from the world of commodities. But first up, let's put the spotlight on the oil market because that continues to remain in focus. Today, it is sitting with a cut of nearly 0.2% to trade near that $67.6 per barrel mark. Remember, it snapped two-day gaining streak in today's trading session. Last week, it was down 12%, and that was the worst week that we have seen since August 2022. Remember, it also snapped three-week gaining streak last week, and this was after the solid spike up that we had seen in the week earlier, where Brent crude spiked nearly to $80 per barrel mark on account of escalating geopolitical tensions. But last week, that de-escalated, and Brent crude currently trades near that $67 per barrel mark. But several moving pieces as far as the oil market is concerned, and the most important one being the OPEC Plus decision, which is expected to come in at the end of this week on Sunday, that is the 6th of July, where agencies have reported, citing sources, that OPEC Plus could consider 411,000 barrels per day output hike yet again in the month of August. Now remember, this will be the fifth consecutive month of output hike. And this is a part of larger scheme of things where OPEC Plus had started unwinding its production cut in April this year. They started with 135,000 barrels per day hike in April, followed by 411,000 barrels per day output hike in the months of May, June and July. And now agencies have reported that this could likely continue for the month of August as well. OPEC Plus, remember, aims to regain its lost market share, and all eyes will be on next OPEC Plus meeting, which is scheduled to happen on the 6th of July. So any outcome from that particular meeting will directly have an impact on the oil market. But apart from oil, let's also put the spotlight on the yellow metal then. It is currently trading at that $3,290 per ounce mark, and several moving factors over here as well. Remember, US trade talks continue to weigh heavy, and US President Donald Trump's big beautiful bill. So these are some of the moving factors which continue to impact the oil market. But to discuss this in greater detail, we are now joined by Mr. Prathamesh Malia, Deputy Vice President, Research, Commodities and Currencies at Angel One, is now joining us. Mr. Malia, thank you so much for taking your time out and joining us here on ET Now. And first up, let's put the spotlight on oil because of the recent OPEC Plus decision. As of now, it is source-based information, but looks like OPEC Plus will go ahead and increase output yet again in the month of August. How do you read this, and what kind of impact will this have on global demand-supply equation and its impact on oil prices for the rest of the year?
I think if this happens, it would be consecutively fifth time wherein the OPEC would increase the supply in oil markets. Basically, at this point in time, oil markets are fairly balanced on the supply as well as demand side. The geopolitical risk is out of equation. So the risk premium that was built in the oil prices is no more a potent factor for driving oil price volatility. So if you're asking me what would it have an impact on the price, I think with demand and supply fairly balanced and supply possibly to be increased, it would definitely create a pressure. I am talking from a perspective of WTI. I think at present it is $64, $60 is where the base would be formed. So I am expecting a correction of at least $4 to $5 from current levels. And if you translate that into the Indian markets, almost $1 move would somewhere take around $80, 80 rupees. So in that sense, almost around 400 rupees correction looks possible as far as MCX oil futures is concerned. So in numeric terms, it would somewhere close to around 5,100 mark as far as Indian market is concerned.
Understood. So that's as far as the decision of OPEC Plus is concerned. But by when do you expect OPEC Plus to completely unwind their output hike? Is it expected to happen in this calendar year itself?
I think with the recent volatility in oil prices and the rise in oil prices, they probably seem to have lost the market share and they want to regain that market share, because of which they are continuously increasing the supply side and increasing the supplies. So unless they regain their market share, specifically from, I'm talking from a perspective of Saudi, who is the key member of the entire OPEC alliance, until they regain their share, they would continue to do it. And they would also ask compliance from all the other members of the OPEC. So until that happens, you would continue to see oil supplies being increased from the OPEC part.
Okay, so I understand that's as far as OPEC Plus's decision is concerned, but as far as prices in the global market are concerned, we've seen a lot of volatility from $65 per barrel because of geopolitical tensions. They surged to nearly $80 per barrel before cooling off yet again. Currently, it is trading at 67. Where do you see oil prices for the rest of the year, especially in light of OPEC Plus decision, which is expected at the end of this week?
I think the volatility and the geopolitical risk part is taken off. So the supply side would be more prominent now, and it would overtake the demand side. So correction looks possible. Brent, you're talking about $67. I think $60 is where it will form the base. WTI, it would somewhere be around $58. And in the Indian markets, it would somewhere be around 4,800 rupees.
Okay, so that's as far as oil prices are concerned. But now shifting focus to the precious metals market, then where do you see gold prices headed? It is currently trading near $3,300 per ounce in the global market. Geopolitical tensions seem to be de-escalating. Do you expect the upside in the yellow metal to be limited now for the rest of the year?
I think whatever price moves, volatility, risk premium, it is almost factored in. And from the high prices, gold and silver, both this commodity have corrected. It really needs a fresh set of factors for prices to move higher from current levels. But we are expecting possibly a correction of $100 as far as gold is concerned, and possibly a correction of $1 and $1.50 as far as silver price is concerned. Gold in the international market is trading close to around 3,293 mark. So $100 correction would take it towards $3,150 mark. In the Indian markets, it translates out to be a possible correction of 3,000 rupees. So current market price on the MCX futures is trading at 96,000 mark. So 3,000 correction would take gold prices in the Indian market somewhere around 93,000 mark. As far as silver prices is concerned, I think 1,04,000 is where we would expect a correction from current levels. At present, it is trading close to around 1,07,000. So 1,04,000 is where we see the base forming for silver prices.
Understood. So you expect both gold and silver to correct from the current levels, both in the domestic as well as in the global market. But shifting focus to now other industrial commodities then, especially copper, because of the supply crunch, because of LME supplies that have declined nearly 80%. LME inventories of copper have declined nearly 80% this year. If you can tell us, where do you see copper prices headed for the rest of the year? I was just going through some data, and copper has risen nearly 6% over the last 1 month. Do you expect the uptrend to continue, and how will demand supply dynamics shape up for copper in particular?
I think the demand supply dynamics would definitely take a push if China comes out with something that is out of the box. So that will take care of the demand side. And with 6% rise in past 1 month, I think there is still more room for higher copper prices, taking into consideration the ease of geopolitical risk, the tariff side situation. I think all these factors sound good for copper. So I would say probably a rally of 4 to 5% from current levels cannot be moved out. In the Indian markets, the rally started from 820 rupees on the MCX futures, and it has moved to 900 levels. So possibly a 4 to 5% move from here on would at least take copper prices to 945 levels mark in the Indian markets.
Okay, so that's as far as copper is concerned. But what about other industrial metals? If you had to pick one industrial metal that you're very bullish on, which one would that be? Zinc, lead, aluminium, anything from this pack?
I think aluminum would be the favored pick, taking into consideration the automobile and the electric vehicle story, and in which silver would be the highest usage, and automobile industry again, wherein aluminum would be the highest usage. So I would definitely pick copper as the rally metal for the rest half of 2025.
Understood. So that's as far as industrial metal and its outlook is concerned. Mr. Malia, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is for the commodity market. But